Hey, it's Richard again with Matthews Wealth Management. Back-to-back takes here for two different presentations. Still April, still 2023. This time M2SL and Federal Reserve balance sheet. These are always fun. But I think we've got some good news this time. Again, just the history of the M2 or money supply. I don't mention that often enough. And M0 is the cash and coins that's going around. M1, you add some savings and checking accounts. M2, now we're counting money markets, mutual funds, IRAs, right? So we want to know how much money is floating around out there. The answer to that is $20,818,100,000,000 floating around, 90% of which is digital already. So digital currency, people, we're basically there, right? In fact, if you have an IRA, it's already governed by the IRS in taxation, contribution limits, forced distributions, penalties if you take it too early, penalties if you don't take enough. There's all sorts of ways that they force your expenditures and taxation on IRAs. Isn't that what we're afraid of with central bank digital currency? Yes, but it already exists in your IRA, and 90% of our money is already digital, so don't flip out too much. It is a concern, though. Anyway, this money supply and the creation, there's TARP, right? The big bailouts of the banks. We have to keep propping up mortgages because, I don't know, it's just not a good business or something. And then we have COVID, and you can see it's turning, right? We've got a hill. We've crested the hill. That's exciting. Zooming in, this is pre-COVID, COVID, and then continue all the PPP and unemployment assistance, and then we start to pay it down. Good. Are we paying it down fast enough, right? Because this is the definition, let me show it back this way. This is the definition of inflation, right? So if you were to take a dollar and then just do the inverse of this growth with the depreciation on the dollar, duh. This is super simple, guys. But yeah, if we want to come back to what prices were pre-COVID, it ain't happening. But what we would do is get rid of all of that money that was created. Not only that, but since here, all of this money that was created, because this was asset inflation, that as we burst these asset bubbles, with banks and, we had Bed Bath & Beyond and GameStop and Nokia and all that fun stuff. As all of these bubbles crash, we can destroy the money, and I think we should, but we're never going to get there, to be honest. There will be way too many cracks in the economy to allow that to happen. I'm not in charge, or I would get into more detail of what I would do. But yeah, so we're starting the right trajectory. What are the numbers? All right, so the numbers are, like I mentioned, $20,818,100,000,000. Last month, it was $21,062,500,000,000. So in 1 month, we dropped 1.16%. If I'm not mistaken, I think that's the biggest drop we've done since we started doing this, okay? So destruction of money is incredibly important. This is the focus. Year to date, we have same thing as last month. I do these, keep it January, $21,236,200,000,000. Okay, we're not even 2% down since January. So as you have been keeping up, there's been fluctuations. BTFP had a little bit to do with it, but the majority of our cuts happened last month in M2 if you do the aggregate, so that's good. Since a year ago, we've dropped 4%. Exciting. In fact, today we had CPI come out, and it's under 5%. Yay! And that's what I'm thinking is this is just a factor of time that we'll see inflation come down, but it's still going up. Does that make sense? So it's still 4.9% increase in overall prices. It's not really coming down, right? But this is about it coming down. So there's about a 16-month lag from what we see here to what actually moves its way out to the economy. There are so many reasons why it could be shorter or longer than that 16-month average, and that is up to Congress and up to the Fed and the Treasury. So we'll leave it at that. Since COVID, 35% more. So total inflation from the beginning is 35%, and we'll see that across the board, right? We've seen it way too high in some places as far as inflation, like food, and we've seen it way too low in some other places. So let's go to the balance sheet. So balance sheet is what the Federal Reserve has bought out of the market and replaced with newly printed dollars, which is reflected in that M2 money supply we just covered. So we do care about what the Fed is buying out of the private market, because usually it's bad stuff, right? They're trying to take the risk out of these companies, effectively, that might go under, like banks, and try to prop them up and keep them from having to mark to market. And that's what BTFP was about. In fact, if you see this spike at the end, that's BTFP. That was what we were doing to try to prop up some banks and letting them borrow against the par value of their bonds, after you look at the mark-to-market shortages of their capital. I know that's blah, 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 but I need to say it because I'm right. That's what this is. So this is a closer view. COVID, they bought up a bunch of crap again, and they continued to buy. Then they started to sell things off. When they sell things, that's what we call quantitative tightening, right? They're selling stuff back out into the market. And what that should do is increase supply of bonds. Most of these are treasury bonds, some are mortgage bonds, and a few corporate bonds. But these bonds, as they sell them back out, well, the demand is the same, and actually the yields are going up and other new issues. So the price of these bonds being sold is dropping, which is why the Fed's done it backwards. They should have done it the other way. But BTFP, they issued more money to backstop FDIC and BTFP. And so that was why they issued the money. They bought all the crap that they needed to get that off of the books to prevent more collapses. And now we're actually seeing it come back down, which I'm happy about. I actually figured we'd see this spike continue. And I think there are more bank failures on the way. There are more bankruptcies happening in the corporate on the way. And we'll see what the Fed does. I think they're honestly out of ammo. There's not too much more that they can do other than send this to the moon, which they might do. It's an interesting time. We've got till the end of this month, May, allegedly, to decide about the debt ceiling. And that's the separate video that I'm going to do to kind of explain where things are and how we're looking at our long-term bond allocation. But let's cover the individual numbers here. Good news on all of this, actually, right? So we covered the M2 money supply, and it's shrinking quickly, which is good. We're also shrinking from our most recent bump, right? From the bank backstop. So there's 8.5 trillion on the Fed balance sheet. Why do they have any, right? Like, why are they buying stuff? I thought they were lender of last resort, but no, they're buyer of last resort. Whatever, I'm frustrated about this. And check out my new license plate when you see me driving around to know how I really feel. 1 month ago, it was 8.6, so cool. They have sold off 1.5% in the last month. Well, that's great. And then they actually ended up cutting the M2 money supply on top of that. So great, I'm happy about it. Then year to date, even. I'm not even going to count that 4 basis point cut. But we started at 8.5, we're at 8.5. Everything that's happened this year, we've averaged right back out. We've undone our destruction by printing and then redestroying. So I don't know, maybe this is the new norm, 8.5 trillion. Because we had 4.1 trillion from the mortgage bailouts from 2008, 9, 10. And so we thought we were going to get rid of that sometime. Nope, that was the average normal. I think maybe this might be the new normal. Yeah, it's just doubling it. Who cares, right? Why don't we do 100 trillion? I don't know. There's got to be a principal reason why not to, right? But 1 year ago, we've cut 4.88% off the balance sheet. Awesome. I don't think it'll continue. There's too much pressure coming up. We've, yeah, over 100% gross overall. But yeah, for this month, I would say the Fed and Treasury, or Treasury and Congress, Treasury is kind of what Congress tells them to do, have done well, well enough. And maybe that's in the face of what's coming with the debt ceiling and McCarthy saying that we have to have spending cuts. And yeah, I mean, you don't want to get real about it. It's going to be terrifying. But anyway, it's looking good. This is one of the best months. I think 2 months ago, I had good news about how Congress and the Fed were acting. And this month, again, I'm happy with these numbers. They're on the right trajectory. I just don't think it'll last. So we'll see if it lasts next time. And we'll see you then.